Student loan debt surpassed credit card debt in the United States last year. Students and graduates owe over, get this, $800 billion in school loans. And more people than ever before are defaulting on those loans. So we're turning to John Ulzheimer of smartcredit.com to find out how all of this affects your all-important credit score. Welcome.
Thank you so much for having me.
So, more student loan than credit card debt. This is a pretty startling factoid. And the big question I'm wondering is student loan debt better or worse than credit card debt?
It's kind of an unbelievable statistic, isn't it?
Yeah.
Student loan debt is actually worse than credit card debt for a couple of reasons. Student loan debt tends to show up multiple times on a credit report because the reporting format is on a disbursement by disbursement basis. So if you're in school for 4 or 5 years and you take 10 loans total to cover all the tuition for the entire period of time, it's going to show up on your credit report as 10 unique loans with balances. So from that perspective, from the sheer breadth of accounts with balances, you're going to lose in the student loan format.
Now, kids who are in deferment and now they start paying.
That's right.
Tell me, this is a little pet peeve of yours right now. You're into the deferment alarm system right now.
Well, and the alarm is going off. Student loan defaults are up. Bankruptcies filed by young people up. And one of the reasons is because a lot of these kids are buried not only by credit card debt, but also by the weight of the student loan payments that they now have to make.
And defaulting on a student loan is actually way worse than a credit card, right?
Yeah, it's bad news. The Fair Credit Reporting Act defines how long the credit reporting agencies can maintain negative information on almost all consumer debts except for student loans that are guaranteed by the federal government. That's actually governed by the Higher Education Act. If you default on a federally guaranteed student loan, the credit reporting agencies can, in fact, report that default for 7 years from the date that the loan is paid, not the date that the loan went into default, which is how it's normally working for a credit card or a car loan, for example, but 7 years from the date that it's paid. So if you default on student loans, it takes you 10 or 15 years to end up paying it off, tack 7 years onto that.
Oh my God.
And your children are now taking out student loans before they're coming off of your credit report.
So, I mean, if you go by this line of reasoning, are you actually saying that it would almost be better to actually go out and like max out your credit card to pay for college than get a student loan?
It's actually better for your credit scores to have student loan debt because they are installment loans than it is to have a ton of credit card debt because those are revolving loans and revolving accounts are more risky. But the breadth of the student loans is really the kicker.
And talk about bankruptcy in those two situations, because there is a little bit of an upside to having all of that horrible revolving debt in that you declare bankruptcy, your credit card bill will most likely just get wiped out. What happens with your student loans?
While none of us like to think about having to ever file bankruptcy, that's kind of like the net under the trapeze guy at the circus. It's always there even though you never want to use it. Well, if you have federally guaranteed student loans, that net's not there. It is not what's referred to as statutorily dischargeable. So if you have all this student loan debt guaranteed by the government, you can't just wipe it out like you can wipe out credit card debt or auto debt or mortgage debt. You are going to pay it or you are going to die with it. Those are your two options.
Why? That sounds like terrible options. If you've got credit card debt and you've got student loan debt, is there one that you should be looking to pay down sooner? In other words, which one will have a net better effect on your credit score as you come into your work life?
That's the good news about these student loan debts. If you have to choose and prioritize where am I going to throw additional money to pay these debts off faster, you're absolutely going to want to choose the credit card debt for a couple reasons. A, the interest you're paying on student loan debt is likely tax deductible. The interest you're paying on credit card debt, it is not tax deductible. The interest rate that you're paying on student loan debt is probably a small fraction of what you're paying on credit card debt. So absolutely, when you prioritize, put the credit cards on top of the student loans and attack the principal balances of those most aggressively, ensuring that at the very least you're making the minimum payments on everything.
Okay, extra credit question. I'm going to throw this in the extra here. When you do a loan consolidation as a student, what is the upside and what is the downside to a loan consolidation? Because a lot of people do have those 10 different loans or a lot of different agencies and they want to have just one bill. What are the pluses and minuses of doing that?
Well, there really are no minuses. It's actually all good news. And the good news is that you're likely going to get a better interest rate when you consolidate and refinance into one loan versus multiple loans. You're going to lose a little bit of the tax benefit, but hey, who cares? If I'm writing a smaller check every month, that's what makes me happy. Second, guess what? Now you really do have one loan. instead of 10 different loans. So on a credit report, from a credit reporting perspective, instead of having all of those accounts with balances, now you just have one account with a balance. You've eliminated that huge problem in your credit score.
John Ulzheimer from smartcredit.com. Thank you so much for joining us.
Thank you for having me.
And thank you so much for watching. Clean up your credit, will you?